Hello and welcome to another video from the Bookkeeping Tutor. In this video we're going to be looking at how to record a transfer of money between business bank accounts. We're going to be using a free product, VT Cashbook, which is downloadable from the vtsoftware.co.uk website. So what is a bank account? In accounting and bookkeeping, we treat a number of accounts as bank accounts. There's your bank current account, bank deposit accounts, credit card accounts. When we talk about credit cards, we don't mean debit cards, they run as part of your bank account. And there's your petty cash. This includes any money that you haven't banked within the business, money in your till, money in your safe, float, etc. As with all aspects of bookkeeping, we're going to be looking at a combination of debits and credits, and these debits and credits must balance. We know from previous videos, in order to increase an asset, we need a debit, and in order to increase a liability, we need a credit. Now, in respect of our bank transfers, when we increase our bank account, we are actually increasing an asset and therefore it's a debit. When we take money out of a bank account, we're actually lowering our asset. In order to lower an asset, we need a credit. In respect of credit card accounts, if we increase our credit card account balance, we're actually increasing a liability, and that needs a credit. If we're reducing our credit card balance, we're actually lowering a liability, and therefore we need a debit. In VT Cashbook, there are a couple of ways in which we can process a bank transfer. One is to use the transfer button, and the other is the payments and receipts tab. With the transfer button, the window that opens up, we simply need to enter the date, the details of the transfer, the account that the money is transferred to and the amount, the account the money is transferred from, and then click on Save. When we do that, when we go to our display bank account, we can see that the transaction appears. If we click on the reference number, it will bring up the double entry bookkeeping. In this case, a debit to the bank current account and a credit to the petty cash account. That's because we've transferred money into the bank account and increased an asset, and we've transferred money out of our petty cash account, which is a credit. I'm now just going to delete that transaction so we can enter it using the Payments and Receipts tab. When we use a Payments and Receipts button, in the first column we enter 1 for a payment, 2 for a cheque payment, or 3 for a receipt. In this example, we enter 3 in the first column for a receipt. The date of the transaction, the details of the transaction, the amount. Ledger is bank, analysis account is petty cash, and that's where the money is going from. Click on Save. When we click on the reference number of that transaction, again you will see we have debited the bank current account and credited the petty cash account. That's because we've increased the bank current account balance and decreased the petty cash account. Hopefully this video has explained how the entries are processed for a bank transfer. If you want to learn more about bookkeeping, then why not visit our website, thebookkeepingtutor.co.uk, where we cover all aspects of bookkeeping in our free and flexible training.